Good morning, ladies and gentlemen. Welcome to this Daniel Code webinar. My name is John Needham, and as usual I will be your host for the day. I trust everyone is hearing this okay. Yes, we can. Okay, that's great. Yes, welcome. It's a lovely sunny autumn day at the Gold Coast in Australia. The Pacific Ocean's very blue. The froth on the waves is very high. It's a lovely day up here, and I hope your day is just as pleasant. I've entitled this webinar In the Beginning, and I want to get back to some of the grassroots of the Daniel Code, because recently we've been concentrating an awful lot on the more advanced and esoteric stuff, the fourth seal, and some of our more involved trading programs, and I think I have missed the plot in keeping you firmly on track with the TO3 and blue line signals, which are quite fabulous. And of course they're the oldest program we have. They've been running for 6 or 7 years now. We've tested them over many years. We've had a live trade room running for a year back in 2010, 2011. And we have great faith in those results, which most of you should be aware of. But basically, for that 12-month period, the TO3 and plus signals had an 84% win rate and returned 7.4% per month, not per year, per month. And that compounds to about 96, 97% a year. It's quite extraordinary. Some of you, many of you in fact, were in the live trade room when we were doing that. For those of you who are seriously interested in trading these TO3 and plus signals, which I'm going to talk to you about today, I do suggest that you contact Terry at support@thedanielcode.com and purchase a copy of the trade room transcript. It's a document that covers every trading day for 12 months, where all of our TO3 and plus signals were traded in real time, and it's a massive document. It will take you many weeks to go through it if you're careful and systematic about it, but it is about the best education you can get in trading, a proven trading system there. So that's the sort of things we're going to talk about today. I'm going to show you some of the more amazing things about the Daniel Code and try and redirect your attention back to these basics, which are vital. And I know many of you, even some of my tutorial students, just are not observing all of these basics and therefore not getting the most out of their programs. So let's move on as we delve into the mysteries of the Daniel Code. The essentials, the things that you must know, are the trend, whether the market is trending or consolidating. The usual definition of a trend, which you'll have heard 1,000 times, is higher highs, higher lows. Trend is up, lower highs, lower lows, trend is down. That's a bit of an old-fashioned definition. It is basically true, but you get terribly confused using that definition when markets are consolidating. And a much simpler way is to look at the members charts at the Daniel Code, which are at the Daniel Code website. I'm sure you should all know that. If you're newbies here, welcome. I'm going to show you all this stuff, so don't rush away in a panic just yet. We do have quite a large number of new people with us today, so welcome to each and every one of you. Basically, on the members charts, which we're going to look at shortly, they have blue lines, which are extensions of the operating range, and they have red and black lines, which are retracements of the operating range. When markets are tracking the blue lines, the market is trending. When it's tracking the red or black lines, it is consolidating, and you'll see this quite clearly when I show you the charts. Targets is something you do need to know about, particularly people trading FractZen have asked many times, what are the best targets and how do you use them in FractZen, and I'm going to show you today the really simple version of that. And we have to know about turns. Turns are vital, and we have various types of those. We have our blue line turns, our TO3 turns and our daily signals, and these are the signals we create for you that mark the turns. I'm going to show you the Daniel Code trade program, which not all of you have access to, which is kind of strange because I don't know how you trade without it, or I certainly don't know how you get the most out of your trading without it. And in that trading program, we show you the signals every day, the entry point, the stop loss, the first target if applicable, and it also carries these signals forward automatically. We have various time frames for which these signals are valid, and it can get confusing. The blue line signals are valid for the day they're posted and for 2 days thereafter. That is, they're valid for 3 trading days. The TO3 signals are valid for the day they're posted for and the next day, and the daily signals need to be elected on the day for which they are posted. Now, the good news of that is that the Daniel Code is the only form of trading I have seen where the signals consistently come early, and they do that because they're designed to do that. And keeping track of those signals, whether they're a carry forward or whether they're expired, is the job of the Daniel Code trade program, which does all of that for you, and it's quite marvelous. Having said that, the other side of it is that sometimes they come a day too early, so it is worth making a note of those signals, particularly the daily signals, which are only valid for the day of entry, and so they're not carried forward on the trade program. But quite often you'll see those actually elected a day afterwards. So we can't force markets to do anything, let alone meet our requirements and our time frame. So you need to give all these little time frames a plus or minus 1 variance at least. And stops, and I'm going to have a lot to say about stop loss management as we move on. I've given you a couple of charts here to try and show for you the difference between a trending market and a consolidating market using the definition I've given you. And if we look at this chart here, this happens to be USD-JPY, and I picked it because it's got a nice big fast trending market running up to the December 2013 high, and then it goes into a consolidation, and I want to show you how the members charts will just highlight the difference between a trending market and a consolidating market, and the sorts of things you can expect to see from these members charts. Now, before I forget, on the front page of the Daniel Code, www.thedanielcode.com, you will see the banner for this webinar called In the Beginning, and underneath that you'll see a link to a PDF, and I think it just says charts for 0319 webinar. And I've got, I don't know, perhaps 15 or 20 charts there. I've got enough here to show you as well, but I didn't want to bore you with endless repetition. So I put the other charts that I just gathered to demonstrate this exercise in that PDF, and I suggest you do look at that to reinforce what I'm going to say to you. So the first thing is these blue lines and our red and black lines are completely and utterly extraordinary. They are not Fibonacci numbers, they are Daniel Code numbers, and the Daniel Code is a mathematical matrix of infinite numbers in the same way as the Fibonacci sequence runs up and down. Daniel Code sequence runs up and down, but Fibonacci's are an interesting sequence if you're breeding rabbits, but for some reason they've gained great currency in market trading, and they don't work. They are mere approximates. The two major fib numbers are used by floor traders to park markets when they don't really know what they're doing, and I call them the NFI targets, but 2 of those Fibonacci numbers are near 2 of the Daniel Code numbers, and that's why they do appear to work, but you'll see that the Daniel Code numbers work exactly and very, very precisely, quite extraordinary really. So here's our trend up, and we have 2 sets of blue lines, which is normally what we have on charts. Sometimes we'll have 3 sets, and the fact that the numbers are on different sides of the line indicate that they're different sequences. But remember that these are targets, and we're looking for target recognition always to set up our trades, and target recognition can happen at the bar high-low or at the bar's close. So let's just run through this really quickly. This market starts moving up from its low in October 2013, and you'll see this bar on which I have the highlighter right now. See if you're keeping up with me here. I know we're a long way away and these pictures take a while to transmit. That bar closes exactly on the 100.014 blue line. And that's telling you that there's target recognition on that bar. The next bar goes a bit higher, and it just breaks through the next blue line and reverses, and that sets up the first sell signal there. Remember, most importantly, when markets are trending, they'll only retrace 1 to 3 days. That's the norm in a trending market. So every time you have a sell signal, it's immediately followed by default by a buy signal, because if it's just a counter trend, we expect the trend to resume. So we had 1 day down, a key reversal bar. We've had a sell, so the next is a buy. You get the inside bar here, which is a null or a void. You carry the signal forward, and you're elected long, and up it goes. It runs up to here, hits the blue line, reacts and runs away from it. 4 or 5 days later, it hits the blue line, goes up further, and then this line, 103.387, forces that key reversal, and you'll see, if you look closely here, how exact that bar was. That's within 2 or 3 ticks. This is a Forex market. And it works exactly the same on Forex and futures, as you will see, and it has to run up to that market before it can turn. That's what these numbers do. That's the power of the Daniel code. And that forces a turn 2 or 3 days down, back up, tests it again here, exactly the same thing, hits it, does a key reversal bar, has a couple of days down, runs up. This bar sitting right here closes right at the 103.387 number. That's the 3rd time it's been there. Remember, the high or the close is target recognition, so that is target recognition on the close for the 3rd time, and it then tries to force through, but it's forced into a key reversal bar, which go down, and then it retests the 102.549 blue line from the other side. You'll recall on its way up here, it didn't pay a lot of respect to that 102.549, and it's very common when markets run through a Daniel code blue line that they will then go back and test it from the other side. It's exactly what happened here. 2 days down, so far that's a counter trend. You had a sell signal elected, which means automatically you have a buy signal the next day, and up it goes. And where does it go? It runs straight up to the 104.351. The next day it has at the same target. The high is again 104.351, plus or minus a few ticks. The next day we get a weak key reversal bar that just has 1 day down, and up it goes. And eventually it reaches 105.420, and that sets up a TO3 sell, and it fools around there for a couple of days, testing that number, testing it. Eventually it's forced into a key reversal bar, and down it goes, which starts the big run down there. So if you can see how at every phase of this market it's gone to the Daniel code numbers, and if you look at that PDF of other charts I put up for you, they're just quite simply a selection of charts with the old Daniel code numbers on them. They're not neat and tidy like the DC members charts, because I just use the subsequent data and let them run along and put them up before I put the new numbers up to show you how markets react at these numbers. They are precise and almost exact, and on the very, very rare occasion when they're not, it's not a failure. It just means that the market has shifted to another time frame. Markets are great shapeshifters, particularly regarding their time frames, and the Daniel code numbers are actually infinite. There's an infinite number of them. But the good news is that markets use the same 3 or 4 patterns all the time. So under the chart archives at the Daniel Code website, we have over 29,000 members charts, all of which I've done by hand over many years, and they've been on the website. And you'll see there that markets never turn except at these blue lines. So For you FractZen people who are looking for targets, these are your targets. There are no better targets if you want to use targets in your FractZen trading or any other form of trading. They will go to the blue lines. For those markets, we cover a vast range of markets at the members charts. But for those markets that don't have the blue lines on them, I can't cover them all in the detail that we do. Don't worry, because we create these signals for you. If there's a TO3 or a blue line signal, we'll create those for you and post them in the daily signal, so they do appear anyway. Of course, you can rightly assume that if there is a blue line signal, it is at a Daniel code number, and the plus signals similarly on the retracements. So that's what you see on the run up, and that's how you know the market's trending. It will just, excuse me, it will follow those lines. Moving on to the next slide now, I'm actually showing you the same market, but this is the retracement pattern. We just saw the blue lines ruling this market on the way up, and I now want to show you how our red lines are our retracements, one of which is a black line. That's the final number in the Daniel code sequence, 89%, how they rule markets on the way down. This looks a bit complex, but I'm going to take you through it, and you don't have to remember these ratios. When you become a member of the Daniel code, you get the Daniel code tools, which is called a library in Trade Navigator, and it has all of these tools that create the retracement lines, and we'll see some special stochastics that we use as well, which just will automatically go into your Trade Navigator package once your subscription is in place and you become a member. But let me briefly take you through this that looks terribly complex. We have a number of different swings in this run up, and the retracements work on swings. So one swing runs from that high down to that low, and I've actually made that a dotted line, which is very hard for you to see, but it's there. So that's the first swing. The second swing goes down to, excuse me, this outside bar here, and the third swing goes to the low that we saw before. And each of those swings has a retracement, and what the market is retracing will be told to you by how it reacts to the numbers. So here's our first swing down to this low here, and we put on our Daniel code retracements, and this one here happens to be 37.5%. And as soon as the market starts to come down, it hits that Daniel code retracement there and runs back up. And it runs back up to 105.29 plus or minus a couple of ticks, which is the Daniel code black line of the minor swing. And that it does that all the time. Then it comes down, it pauses at this number again, breaks through, and it goes to this 102.809, which is a Daniel code retracement of the major swing. So it's switching between the minor swing and the major swing, which is quite normal. Then it has a rally back up, hits the other black line, down it comes, same thing, it hits exactly on the blue line, the 102.11. Then it tries to force through the next day, and it's forced to reverse, and it's forced to reverse because these Daniel code ratios rule all markets. You don't have to believe me, you can find that out for yourself. As I said, there's over 29,000 charts in the chart archive at our website. Check them all, and you'll see what I mean. From here it rallies, doesn't quite get to the target of the retracement, comes down, another go, it gets almost exactly to 102.809. Same thing, it comes down, it goes to the 74 retracement of that swing. This is just a little swing from here to here, and then it roars up, and it's back onto the swing from the major retracement, which is now from this low here in February all the way up to the high in early January. Hits that with a degree of precision, I think you'll agree. Down it comes, it has a bit of target recognition at this line. It comes down, does a reversal bar there. Next bar's not far away from it, next bar breaks through it, down it goes and runs back up to test there. So you can see the difference, I hope, between trending markets, which are tracking the blue lines, and consolidating markets, which are tracking the red and black lines. And this stuff is vital. If you don't have these numbers on your chart, you are missing out on a huge excuse me, benefit, which I'm going to show you as we go through. Here's our next chart. I've got about 5 or 6 of these, and all I'm trying to show you here, these are picked almost entirely at random, because all markets do this all the time. It's uncanny, amazing, and when I first discovered this stuff about 25 years ago, I spent at least 7 or 8 months simply looking at the charts doing this, and I assure you no one is more amazed by this Daniel Code target recognition than I am. But markets will not turn unless they've made target recognition a Daniel Code number. Now, if you knew nothing else apart from that, you immediately have a huge advantage in knowledge over everyone else who's trading markets. So that's a vital piece of information. I know a lot of you don't go and get the numbers from the charts and put them on your chart because, I don't know, is it too much work? I don't get that. You only need to put on the next couple of numbers, and there's some very simple tools in Trade Navigator that's virtually one click, and then just type in the number. It only takes moments, and it's vital because, as you can see, it's this target recognition here that sets up the sell, and this was a really nice sell. If you missed that because you didn't get the Daniel Code numbers, then you're not trading to your best ability. And I want to get you people trading. The ones of you who are trading, I want to make it better for you. I want to make it easier for you. And I also want to make it more profitable for you. And these blue line trades that we're leading up to here are quite extraordinary. Here's sugar. I'm not going to labor it, doing exactly the same thing. You can see here that it's high, with a few ticks through the 1827 mark, and it closed a few ticks above the 1822 mark. Markets know and recognize these Daniel Code numbers, and very, very few people know about it. And in trading, when you know something that the rest of the world doesn't know, you have a huge advantage. Here's UST bonds, showing you the same thing. It had was forced into a key outside bar here. Where did it stop for the day? 133.10 on the tick at the Daniel Code number. Next day, it runs up and it goes to the next number, 134, a couple of ticks through it. You'll ask me how many ticks is target recognition. Look, if you do it, you'll get used to it. We've got all sorts of things in the trading manual about, 10 ticks, 20 ticks. It's very, very close. It's much closer than that. We put that in the manual just to get you thinking about it. But if you look at these charts, look at the members' charts every day. They're posted on Saturday night, your Saturday night, and Sunday, my Sunday and Monday, the weekend new charts, and they're updated on Wednesday night while you sleep. We're hard at work doing that. So if you look at these charts, your eye will be trained to just see how precise they are. There's UST bonds for you. Here's the next chart, exactly the same thing, EUR-USD. You can see it running up to that 139115 number. Why did it stop there? Because that's a Daniel Code number, and it had to have target recognition. Here's copper. This was a pretty interesting trade we're going to look more at, but I wanted to show you this chart just to show that the way to test this stuff for me is if this really works, it should work when there's high drama. And this was the day recently that copper had a big and very, very dramatic collapse due to change in the regulations about using copper, warehouse copper, as collateral for letters of credit in China. An announcement came out from PBOC in China, and it sent copper into a very, very dramatic tailspin. But the point I'm trying to make to you is, here's the rally up. Where did it go to? One of the Daniel Code retracements. That slightly darker one of the reds is in fact the 50% line. That's a very, very normal retracement for markets. 37.5 and 50% are the most common retracements in markets. It hit that number, did a key reversal bar. We actually had a sell signal the next day as a result of this key reversal bar and target recognition. So you sold the market in here, and it certainly didn't look good, did it? Because you got filled and the market rallied back up. It was a TO3 signal, so you were looking for your first profitable close to exit. If you were trading according to the starters rules, if you knew a bit more about trading, you were more comfortable holding trades, you stayed in this trade a lot longer. I'm going to show you that as well. But you were in that trade overnight, and look what happened the next day, whoosh. You just made a whole lot of money. But where did that big, dramatic, supposedly panic move close? 308.20. A few ticks away from the Daniel code blue line. And that happens, folks, all the time. I see this so often. I've been doing this, as you know, for best part of 25 years now, and these charts are the things that take the vast bulk of my time. They're all created by hand, and I do them personally. But this happens all the time, all the time. And if you want to know where markets are going to stop for the day or its next sequence, they're going to stop at a blue line when they're trending and one of the red or black lines when they're consolidating. Here's T-bonds. You're seeing exactly the same sort of thing. It runs up into the blue line. We get a sell signal, and down it goes. And it keeps going, keeps ticking off these little retracement numbers here, but actually it's not completed that move until it finds this blue line down at 130.21, and it's about 2 ticks through that, and then you get the reaction with the close higher up. And these numbers are like magnets to markets, and they're really extraordinary. Here's another huge dramatic move. The chart you're looking at now is natural gas. The market has been running up here, and all of a sudden, look, it finds this number 5225, and it's forced into a key reversal bar. So don't miss the point that sometimes markets can find and react to these numbers on an intraday basis. So you really need to know where they are so you understand the probabilities. This was just an absolute standard blue line trade because of this number here, this market here, these stochastics here that you see are Daniel code stochastics. They're slightly different to normal stochastics because they're engineered so the inside bars do not create a chartable reference. The biggest errors in all stochastics are caused by inside bars. They're the ones you see in red there. They're called inside bars because they're wholly inside the previous bar. I designed these stochastics so that when they have an inside bar, instead of using it in its calculation, it takes the average of the last 2 bars instead. And there are less errors in these stochastics. So if you look at our trading manual, a blue line trade setup needs to have the fast stochastic, the 533 overbought, the slow stochastic, the 1433 overbought, and divergence in momentum. And what that means here is this mark, this bar here, before the turn, it made a new high for the move. And if you go down and look at our momentum indicator, it did not make a new high for the move. So market making a new high, momentum indicator does not make the high, or vice versa. Momentum indicator makes a new high, market does not. That's divergence. It means our 2 indicators between price and momentum are diverging, and that's a precursor to a reversal, which of course we got there in great shape. This is, excuse me, your charts will change momentarily. This is the Daniel Code Trade Program. This is the centerpiece of the Daniel Code website. And I'm astonished to find that a lot of you who are trading with us do not have access to this because you're not on the right subscription that allows you access to it. This is an extraordinary piece of work. We've had it for many, many years, and this is comes up new every day. And what it does is it lists for you the trades for the day. This happened to be fairly recently, probably yesterday. It tells you what the market is. This is the name of the market here. It tells you what the code for the market is, the Trade Navigator code. It tells you whether there's a buy signal or a sell signal. Here's Aussie USD had a nice little start of a sell today. It's going to go a bit longer, I think. It tells you where your entry is exactly. It tells you where your stop loss goes exactly, and if it's a TO3 signal, you need to know the first target, and it goes there, and it tells you the type of trade it is. And there are three types of trades, R, C, and 3. They're the types of trades. All TO3 signals, incidentally, are R trades, R for reversal trades. And underneath that, at the website, it lists exactly how to trade. It tells you exactly how to trade each of those markets. It also tells you whether the trades are correlated. Over here it says correlated, yes or no. And that is because many of these markets interact with each other. So, for example, if you look at the first two markets, they have the Aussie dollar on one side, Aussie dollar on the other side. Skip down here is Euro-AUD. So we have three markets with the Aussie dollar involved. To some extent, that degree of correlation means that you're trading the same market. And we need to know if these trades are correlated, because the trade program will then go and divide the suggested number of contracts by, in this case, 3, so that if you take all of those trades, you're not over trading. And all that is done automatically for you. You can see down here gold and silver are also correlated with each other, and the trade program tells you that and cuts down the number of contracts that it's recommending for you to take. And what you do with this, it's a live application. You type in here the number of contracts you want to take. The program will recommend what you should take, but if you're only trading Forex or futures, you'll have a different amount here. If you just type in the number of contracts you want to take, it will automatically calculate in this box for you the total risk if those trades are elected, and down the bottom it will show you the total of all of the risk. And don't forget, not all of these trades are elected. In fact, only about half of the signals are elected. By that, to trade to be elected on the buy side, it has to trade above the true high of the previous bar. To be elected on the downside, it has to trade below the true low of the previous bar, and we use a small buffer just to avoid the vagaries of markets that can just sift through a tick or two. But it's absolutely vital. This Daniel Code Trade program is the center of Daniel Code trading, and if you don't have that, I honestly don't know how you're trading. Let's move on, because I've got an awful lot to tell you today, and some of this stuff is taking me a little bit of time. I wanted to tell you how to trade the TO3 signals. I've done so many webinars on this and PowerPoints, etc., that I thought everyone knew, but Jerry, who's my personal broker and has been for many years, pointed out to me that for new people coming to the website, there's nothing obvious about how to trade the TO3 signals, and I'm going to show you two ways to trade them. Now, the TO3 signals are optimized for defense. If you're new at this business, I really suggest that you start trading the TO3 signals exactly as the rules say, because they are optimized for defense. And you'll see from the trade program that if it's a TO3 signal, you'll have a place to put your entry, a place to put your stop, and it'll also give you a first target. And the first targets are quite small, and they're designed to be quite small because we want a very high rate for them of success. The vast majority, very high number, probably in the 90%, if they're elected, they will reach the first target. I think it's about 86-87% actually. And at that point, you take off half your position, and that's profit, and you move your stop to break even, and you've now got rid of any remaining risk. Now, that's a very, very aggressive way to handle your stops, but specifically I've designed it that way. You get a small profit on the vast majority of your trades, 85-86%, something like that. And then because you've moved your stop aggressively, one of two things can happen. Either the market can continue to go on, and on the other part of your trade, the other half, you make a lot of money, or it will come back and stop you out, but your stop is already at break even. So you've already banked a small profit. And this works on banking small profits 85% of the time, big profits when markets really move. but it's a very, very safe way to trade. For those of you who are more experienced, there is a lot of money to be made by holding the TO3 signals longer. How much longer? I'm going to show you. One of the things that I was doing when we had the live trade room is I was using a fairly early version of FractZen to tell me whether to hold the trade or not. And that's quite an extraordinary function that you can use FractZen to tell you whether you should be holding the trade, the TO3 signals, leaving the stop in the original place, or tightening the stops. If you're going to use FractZen, just use it as a caution. If you're on a sell, as we are here, and FractZen gives you a buy, that means tighten your stops. Don't go long, because then you're trading FractZen, not the TO3s. So this is the V1 I put in there, version 1. This is the one that's in the rule book. The rules are set out underneath the trade program in the Daniel Code website, and they're very specific. And I want you to trade that way when you're starting to trade. As you get more comfortable with this stuff, here's V2. You saw we only made $70 when we traded the way I've suggested that new traders should be trading. But if you're more experienced and more confident, you can hold these trades longer. And if you held this trade just another few days, in fact until the close today, that $70 turned into $3,700 and something dollars. And the simplest way is to look at this stochastic here. This is called the fast stochastic. This is the Daniel Code 533 stochastic. And when we want to hold a trade, this is the same for the TO3s and the blue lines, we use a 2-bar trailing stop until the stochastic gets overbought or oversold. Now that means that when this bar is complete, a 2-bar trailing stop, this is the highest of the last 2 bars, so your stop's above this bar. When this bar here is complete, this is still the highest of the last 2 bars, so your stop is above the high of that bar. By the time today's big bar is complete, this bar here is now the highest of the last 2 bars, so your stop would be above the high of that bar. And that's what happens until the stochastic gets overbought or oversold. If we move our eyes down here to see this fast stochastic, the 533 stochastic, we can see that it's now touching. It's the blue line, that's the faster line, is now at the 20% mark, which means that market is now oversold on the measure of that particular stochastic. Don't forget, all stochastics are telling you is where the close of the market is in relation to the previous X number of periods. In this case, this is a 533, so it's telling you where the close is in relation to the close of 5 days ago. And we've now got, and if you go to the 1433, it's entirely different. But we use the fast stochastic for this purpose, and now that this market has got oversold, we switch from a 2-bar trailing stop to a 1-bar trailing stop, which means our stop is now right there where you see the red dot, 2 ticks above the true high of that bar. And that's the way to hold on to these trades longer if you are experienced and happy to do that. We're now moving on to trading the blue line signals. They come under the plus suite of signals. We create them for you. You can create them yourself from the members charts, but some of them are a bit tricky. For example, right here, the definition of a blue line signal is the fast stochastic overbought, the slow stochastic overbought, and divergence on the CCI. Well, here, the fast stochastic, if you look at this, is not overbought. The slow stochastic is overbought, and there's a ton of divergence on the CCI, which is a modified version of the CCI. For goodness sake, don't go using the standard CCI. It doesn't work. It's a very old indicator called the Commodity Channel Index. The default setting for it when it was invented was about 100. We've modified it drastically to use as a modern and efficient momentum indicator, but it's still called CCI because that's the name it has in the Trade Navigator library. But this is the Daniel Code CCI is very different to a standard commodity channel index that you'd see in any other charting suite. So here's your divergence. The market's made a new high here. You go down here, it's nowhere near a new high. So we have overbought, divergence, yummy, all that's good, but hang on. The fast stochastic, the 533 stochastic, is not overbought. So how did we manage to create, excuse me, a blue line sell signal? Well, what you're looking at here is the futures. The fact that the code up here says GX057, that tells you this is a futures contract. It's in fact a continuous futures contract, but the blue line signal came off the index. In many of these markets we have charts for the index and also charts for the futures, and both of them are valid. So this is a blue line signal that I created and posted, and you probably wouldn't have seen it because that came off the index rather than the futures, and I'm not sure that many of you actually track the futures and the index, which of course I do. So we had a blue line signal posted for there, and it was also a TO3 signal. Now, let's just briefly refresh your memory about these inside bars. The next day, the trade was not elected. To be elected, it had to trade 2 ticks below this previous bar, and it didn't do that. It returned an inside bar, and they are treated as nulls or voids, which means you carry the signal forward. So the sell signal was posted for this day. In any rate, because it was a blue line signal, it was valid for 3 days, which means the inside bar, the outside bar, and the next bar down, it was all valid for that period. But in any rate, the inside bar, we have a special protocol that we don't take the entry on the inside bar, we take the entry on the last bar that was not itself an inside bar. Now, let me deal with that another day, because sometimes you get 2 or 3 days of inside bars. It gets a bit more complex. But basically, this bar elected the trade on the chart even though we didn't get filled because our entry was under here, the last bar that was not itself an inside bar. But we did get elected, so we had to sell it the next day. Down it went. 1 bar up, wasn't nice, but we're on a 2-bar stop at this stage, and the market is nowhere near oversold. Down it goes, rallies, doesn't ever get to the fill point, which is up at this close, rolls over and down it goes, and this is another blue line and TO3 buy, valid for 3 days, was posted for this day, was day 1. This is day 2, was not elected. This is day 3, it was elected. So you got the whole of that trade down and into the start of this rally just from the blue line trades. They're very, very valuable. That is a lot of money. The other point I particularly want to make to you here is you can see this little R down here in a blue triangle just underneath the spotlight. That's Trade Navigator's way of telling you the market is due to roll over on that day to the new contract. Now, that doesn't always happen. Sometimes it can be a few days later. But as rule of thumb, that's when you expect it to roll. That means that the way our trading programs work, we can't create new signals for you around the immediate days, 1 before and 2 after rollover, because we use these 057 continuous charts. A bit technical, and I won't bore you with it, other than to say, remember what I've told you before, or if you're new for the first time, these markets are highly correlated. All of the equities, the Dow, the NASDAQ, the S&P, the Russell, and the DAX, this is Germany's S&P if you like, are so highly correlated that a signal in one can be traded in any other. So we didn't create signals around this period here for the US equities because they were in the process of rollover, and in fact it was actually delayed. They were due to roll over on the Friday week before last, and they went on and on before they actually rolled over just a couple of days ago. But we were unable to create those signals because of the way our software works. But if you've been following the Daniel Code trade signals, you have seen a buy, a blue line, a TO3 buy in DAX, and you should have been able to say, aha, I know that's so highly correlated. I can trade that buy signal in the mini Russell, the mini S&P, the mini Dow, NASDAQ, if they are elected in those markets, and they were elected in those markets, and you had a nice 2 or 3 day rally until the Fed put a bit of a dampener on it with some jaw boning today. But don't forget that the ability to trade correlated markets is terribly, terribly important. Let's keep moving, folks, because I've got an awful lot to tell you, not a lot of time to do it. These webinars go so fast, and I know you get sick of them after a while, so I try to keep them as much as I can. We'll run through this a little bit. This is called putting it together. All I'm showing you here is the copper trade. This was the one you saw in an earlier trade. It came down here. This was a standard TO3 trade. If you got out at the first profitable close, it was down here. You got to put $2,700 per one contract in your pocket. If you held it until the next signal, which was also the 1 bar trailing stop, got triggered right there to take you out of that short trade, you made $5,800. So learning to trade the TO3s and then learning when it's appropriate to hold the trades and use the trailing stop technique is immensely valuable. And this was nice trading, as you can see. We had a TO3 sell signal there, an inside bar. We had a plus sell signal because the TO3 was expiring, got you short. 1 bar up, no first profitable close, so you're still in that trade. It started to move down. Here's your first profitable close here. Or if you use the fast stochastic, you got stopped out above this little bar here, which is also a TO3 buy signal. Got you up 1 bar, another bar, key reversal bar. You recall this key reversal bar made its high exactly at the 50% retracement, the Daniel code red line, and that set up a plus sell signal. And that signal got you short here. We've been through this. The market closed up on its entry, didn't look good. Next day you were hugely rewarded, and another one down, and another one down, and a key reversal bar, and an inside bar, and a slightly lower bar, and you were stopped out right there for about $6,000 per one contract. And those trades, folks, are vital because they're the ones that make you the big money and put the cream on the top of your equity curve. Now, from this webinar, we want to extend to you some one-on-one consultation. I know a lot of you have questions you want to ask, things you'd like to discuss. Jerry Winter, you see his details on the screen here. Jerry has been my personal broker for many years. He's a hell of a nice guy. He's been to a large number, maybe, I don't know, Jerry, 4 or 5 perhaps, Daniel code tutorials. He really understands how the Daniel code works. And we've now arranged that for any of you who would like to, please contact Jerry. You can get him on his email, jerry@fptrading.com, or on Skype, jerry.winter. If you'd like to, Jerry is happy to extend to each of you a one-on-one consultation where he will go through the trading rules and what have you of the Daniel code, with which he's wholly familiar. He's happy to talk to you about any of your other questions. It won't cost you anything. He's a main supporting broker for the Daniel code, and he's extending this service to you. And he's got a he's got a communication program that's a bit like GoToMeeting. You'll be able to see the charts really clearly, talk to him, and he's a nice guy. Now, that's most important. I really suggest you people take advantage of this. Jerry's been a broker for a very, very long time, 28, 30 years, might be more now, and he knows the Daniel code stuff. He's the guy, and he's happy to talk to you, give you a one-on-one consultation, or deal with any of your other questions you might like to discuss. Okay, we're moving on now, and I'll bring you up to date on FractZen. These charts are on these figures here. They're created by one of our members, Sage, and her husband Mustang, who's a certified chartered accountant. We've had these figures checked by a number of people, including our brokers, because they're so extraordinary that you sort of start scratching your head. I mean, you look at these figures of 115% return on initial market in margin in futures, and 160% in Forex, and that's only for 10 weeks. That's from the 1st of the year until the 14th of March, when they were last updated. and you start looking at those figures, divide them by 10 and multiply by 52 to get the annual returns, they are absolutely extraordinary, and not enough of you have taken advantage of this. I mean, I invent these weird and wonderful programs for your benefit so you can make money. I'm making money. I knew about this stuff years ago. This is the first time we've had it simplified enough and deliverable enough to you to be able to let you participate in this. And how FractZen works, for those of you that don't know, is the absolute simplicity. Your cell phone will beep and it sends a signal to you which says buy or sell whichever market, and you simply execute that signal as soon as you can. The text that comes to your cell phone will tell you what the suggested stop is. We've tried fixed stops and trailing stops, and the fixed stops are vastly outperforming the trailing stops. And these figures that you're seeing now are created and used with a fixed stop. Sage and Mustang use FractZen to trade to trade, and with a fixed stop as suggested by the trading program. I've never seen anything like this in my life, and I really invite you to look at these figures and think about them. They're also on our Facebook page and now on the front page of the website if you'd like to think about them. This is something I put in some weeks ago here. If you look at these margins, you've got the big ones like silver, $11,000, and the DAX, which should be in here somewhere. We love it. Oil, DX, S&P Gold. There's the DAX. 25,000 nearly margin. Most of you won't be able to trade those, but don't forget, they're so highly correlated that if there's a signal in DAX, you can trade it on the daily charts, at least in any of the other futures markets. Same for gold and silver. But looking at these figures of these year-to-date profit figures through here is misleading, because they have vastly different margins. So what I've done is come up with a simple calculation to equalize the margins and make them all equal to the DAX for the purposes of comparison. And what you see here, whereas in here, DAX at 22,000, silver at 14.7 look to be the big movers. Once you equalize the margin, have a look at sugar. Sugar's only got a $550 margin. So when you equalize that to the DAX, which you can now have real comparison, it's on $127,000 if you used the same amount of margin. Look at the Russell. These are small margins, smallish margins, way up there at 85,000. And I've done the same thing here. Sage has actually prepared these for me, but I showed her how to do this margin equalization, which she's kindly done, and we don't seem to have the equalization here for the Forex, but you know how it works. It's quite extraordinary. If you're not trading FractZen, look, frankly, folks, you're dedicated to poverty. I mean, I can't put it any more strongly than that. It's the most exciting thing I've ever seen. I invented that, so I would say that, but I've got to admit that it is quite extraordinary. You should get on it. Here's a monster. Sage, who's a lovely lady, sends me these little charts when she's done them, and here's one she sent me a week ago saying, you know, I think you'll be sitting by the pool enjoying a Bloody Mary, and I thought you might like to look at this. Well, I showed it to you just because it is a monster, and it happens to be DAX. And here's another. It also happens to be DAX, and it looks just enormous, isn't it? But you can see these are typical big trades that FractZen gives you. And if you consider those results on the basis of equalizing the margin, I'm not suggesting that you do, because the whole point is you can trade the smaller margin ones. Very few of you will have accounts big enough to trade the DAX and silver. And Sage now, she's been keeping these results for us for 4 or 5 months now. And she keeps them quite independently of the Daniel Code. They're ordered by her husband, so you can take my word, these results are spot on. A lot of people have said they can't be, and a lot of people have tried to prove they're not correct. But I've even had our own brokers say, check this, be as cynical as you can about it, and find out where she's making mistakes and gilding the lily, and the result is she's not. It's absolutely perfect. She's doing a marvelous job for us. and we do really appreciate Sage keeping these charts and giving us the results. And this is one she sent me this morning just to give me a nice day, and she's now due to her work with the FractZen, describing herself as a spreader of joy and abundance. And I know, Shift, you'll absolutely love that, mate. There's Sage, now the spreader of joy and abundance, and who can argue with her? It is absolutely glorious. Now, a couple of notes for most of you who won't be trading these great big markets. This is a note that Sage sent me. First of all, the first line, fixed stop preferred. We've had a lot of discussion whether to use trailing stops or fixed stops. I can tell you that the fixed stop is vastly outperforming the trailing stops, which are just not giving the markets enough room to oscillate on their trips up and down. So the fixed stop is preferred. Those of you who have sharp eyes will notice that 2 weeks ago the text stopped saying X number of ticks trailing stop. They just say stop number of ticks. So you do what you want to, it's your money, but we are finding that the fixed stop is vastly outperforming the trailing stop. Here's a couple of little notes Sage sent me for those of you who follow our equalized margin exercise. The three markets we've been showcasing, copper, sugar, and Russell, have returned 22,000 year to date on a 15,000 account, and that's only for 10 weeks. In Forex, all 9 FractZen markets, the ninth incidentally is CAD Chief, which we've been trialing. It's doing very, very well. I think we've either released it or about to release it. Sage will probably tell me that. Let me see what she's saying. Sound is good. Okay, well, CAD Chief, I know we've been testing it. The results are in here. And that gives us 9 Forex markets. All 9 can be traded on a $42.50, $4,000, 250 account with one mini contract, and that's returned 82% for the first 10 weeks of 2014, and that's 82% on initial margin. Okay, so here's our special offer, folks. I don't want to keep you too late today. We want to make your trading easier, more profitable and enjoyable, but also affordable. A lot of expenses with trading. We want to minimize those for you. And we're inviting you to subscribe to our website Pro program, which gives you everything: members charts, TO3 signals, Blue Line Plus, signals, DC trade program, chart archives, trading tools to go on your charts, which Jerry will show you how to use, incidentally. And if you would like to do that, we will be happy to give you 3 FractZen markets of your choice free, and they are worth $75 a month, so that will offset almost all of the cost of your subscription. If you would like to subscribe for longer than a month, we'll give you further discounts, and you can talk to Terry about that. But this offer ends at the end of the month. It's a special offer. Try and reward you people who are here following us and being active. Here are your free trials. If you want any free trials, contact Terry, support@thedanielcode.com. We can also arrange a free trial of Trade Navigator for you, should you wish, and we'll give you a look at the Daniel Code trade tools, which are the stochastics I've been talking about, and excuse me, the momentum indicator, etc. I'm required to show you this notice of compliance, which tells you, amongst other things, that there's risk in trading, that hypothetical performance is not necessarily correct, and that there's a whole lot of other risks in trading, but that's what you do as a trader. You're actually in the risk management business. We do that every day, but I do need to show you those conditions, and I certainly do endorse them. Okay, so let me see if we can get out of here, and I'll see briefly what else we've got to show you. I think I need a different tool for that. It's not that one. Very complex, all this stuff, folks. I think I'll be good at this now. I do it often enough. Okay. All right, so we've now got rid of that. Okay, let's see what we can do to wrap this webinar up. I don't want to go too long today. I know you've been with us for over an hour already, and I thank you for that. Okay, let me run through these questions really quickly. A couple of things I need to show you. Let me just open my Trade Navigator. This is a perk. If you need to put those blue lines on, look folks, it's this simple. You click on this tool here, which simply says support resistance line. Then you right click on it. I've obviously been using that for something else. You make it blue. You make it from dash large to whatever the default is, and you save that as your default. So now you can just put your blue lines on really quickly using this tool. Let's say that was one there, and you want to right click, go to edit. Comes up, you can type in the actual number from the members charts. Say OK. Once the market's gone through that, you can take that one off and put the next one on. What could be easier? This little fella down here, the hedgehog, whose name is Dan. This is the Daniel code retracements, and you will see that you put him on. We want a retracement from a high to a low. You put him on the high. You drag him back. Here's the first swing there. This was the first swing to here. There's the second swing. There's the third swing. And you pull this out, and lo and behold, 1329. Where did you think gold would go to today? Well, it'll go to a Daniel code number, and it's in a retracement, so it's one of our red or blue lines. And the ratios for this, they're all embedded inside that tool. So when you become a Daniel code member, we'll give you that tool and the stochastics and the momentum indicator and everything else. That was one thing I wanted to show you. The other thing I want to show you, most importantly, is at our website here. This is the trade program. This is the key to everything you do. And if you click on that, yours will probably open a bit faster than mine. You just type in here whatever your account value is, whatever you want, and you put in your risk value. I recommend no more than 2% on a correlated basis, but it's your money. You can put in what you like. And you click calculate contracts. It'll come up and show you these are all the signals for today. And you type in here how many of these you want to take, which ones you want to take. Let's say you want to take a couple of those and something down here. And you ask it to calculate the total value sold. And it does that, and it tells you straight away what your risk is if the trade's elected, where we put the order 92.21. If you stop is at 92.90. Your risk on that trade is $311. Down here, your risk on this trade, $400 on the sugar trade we took. Your total risk is $780. So you can adjust that up. You can say, well, that's not really enough. I want more than that, and you just change it and ask it to calculate, and it will immediately come back and recalculate. You've probably got to go to reset, and then do that as often as you like. Now, these notes under the trade program. Now, this is where the trade program is. We've had people say, I don't have a trade program, can't find it. It's here, trade program, and it appears on your website. Go down here, and this tells you how to trade these signals. R is the R trades. They're designated here in this column. Stop loss and exit protocols will either be an R, C, or a 3. And the TO3 trades, for those of you who are starting to trade them, want to be really cautious. They are R trades, R for Robert. So it tells you exactly what to do on those, exactly what to do on the C trades, exactly what to do on the 3 trades. And you can always talk to Jerry. He'll spend an hour with you telling you exactly how to do all of that and answer all of your other questions. Albert, can the FractZen signals be sent to my computer? Not yet, Albert. We've got an auto trade we're working on. At the moment, the FractZen signals come by text to your cell phone. Terry is working on an auto trade version. We've had it running a couple of times, but it hasn't just been, we know we've got the technology to do it because we've had it running for months actually, but it's not quite robust enough yet for us to give it to you, but it might be in a week or 10 days, and if that's so, it can be sent straight to your computer. Excuse me, and more than that, It'll actually place the order straight into your trading account or your SIM account, whichever you prefer, and it will put the stop on as well. And it'll then wait till it gets the next signal and take the next signal. So amazing. Bob, represent, if markets recognize these numbers in advance, then why not place pending orders in advance, close the office and go to the beach? Well, not that easy, mate. Too many lines. Yes, there are. Much easier. Bob would like life to be easy. It doesn't quite work like that, mate. And if you were a serious trader, you'd want to understand why markets turn, which we try to teach you here. So yes, the blue lines are target recognition. They are a precursor to a turn, but they're not the only thing that creates the turn. And the idea of placing orders in anticipation will send you to the bankruptcy courts very quickly, because markets can continue trends and stay overbought much longer than you can stay solvent. Here's Mark, arrived late, this webinar recorded. It's always recorded, Mark, and it's always available to everyone. It'll be posted on the website in the next 24 hours or so, but I cannot guarantee the technology. The last webinar, it all looked good until we ran the program to format it, and it turned out we'd lost the first half of it, but normally, yes, it's available. Oh, here's Sage. Thanks, Sage. Yes. We are going ahead with CAD Chief. I don't know whether it's already released or not, but it's been tested. I think you can see the results in the wrap-up of the Forex pages, and it's been doing very, very well. So that's the new one there. Well, thank you, folks. That's about it for today. I thank you for your company. We've gone 10 minutes over, for which I do apologize. I hope you've enjoyed it, and I do ask that you have another look at this, come back to the website, and we'll have this webinar up for you to see. Go through this stuff. Anything you don't understand, you can talk to Jerry about it, Jerry Winter, and he'll be happy to put it on a chart and go through it with you and explain how the Daniel Code rules work. I thank you for your company, and have a great day.